Markets are on the rebound. So if you look at global stock markets year to date, it might surprise some to know they're up 5 or 6%. You know, this is at the point of recording, of course, these things can change, but very positive so far this year. If you wind the clock back to the lows in October, up 15, 20%, depending on the region. So a really positive start to the year, really positive last few months. I'm joined by Baylee, and we're going to talk about the reasons behind the resurgence in markets and the positivity. Baylee, before we get into this, one thing I want to quickly mention is that it has been said by some that when I'm up and when it's my episode, it can sometimes be a bit longer than the average because I know some people say that I talk too much. I don't think it's true, and I want to dispel it this week by having a super short, snappy update. So let's get straight into it. Inflation is the thing that we've talked about lots, and we've said this is the thing to watch. This is the thing that will move markets. Is this the story behind the recent resurgence in markets?
Yep, well, inflation is definitely still in the driving seat, but this time there's a little bit more optimism. Over in the US, we saw inflation fall to its lowest level in more than a year, declining for the sixth consecutive month down to 6.5% in December. Compared to the previous month, prices dropped 0.1%, which might not seem like a lot, but it shows that they're moving in the right direction. However, there were elements of inflation like services that are proving to be a little bit more sticky and will be slower to come down. And that theme is following through to other regions too, like in Europe, where we've seen inflation fall for the second consecutive month.
Okay. So inflation coming down, but maybe sticky in some areas. Turning to fixed income markets, and I guess this is related, but you know, I'm looking at bond markets and they're also up. So bond values have gone up because the yields have come down. Is that a function of central banks, you know, saying that they're going to maybe pause the hikes or even cut interest rates?
It's not so much at the moment about what central banks are expecting. It's more about what markets are expecting, and that has really helped prices. Markets are now pricing in interest rate cuts this year. In the US, the current interest rate is 4.5%, and markets are pricing in a peak of just under 5% in June, falling to around 4.5% at the end of the year. In Europe, the interest rate is currently 2%, expected to peak at just above 3% in July time, and not move too much around from that.
Okay. So subsiding inflation, can't even say that. Subsiding inflation, potentially interest rates subsiding, so all positive. I mean, some of the other things that I'm reading about in terms of positivity are emerging markets, you know, China reopening from the lockdowns, maybe a milder recession in Europe. Are they the key things that are also stimulating, or anything else on your radar?
Yeah, those are definitely some other important factors. But another key thing would be earnings. Analysts are expecting earnings to decline in the first half of this year, but they're expecting earnings growth in the second half of the year. So perhaps investors are optimistically looking through to that longer term picture. So far, 90 companies in the S&P have reported. It's definitely a mixed bag, but some reports are better than expected. Okay,
excellent. Falling inflation, falling interest rates, kind of earnings that maybe aren't as bad as expected. Sounds pretty positive to me. And I'll tell you what's also positive. That's about 3.5 minutes. So I'm pretty happy with that. We will be back next week. We will do a short and snappy update. Until then, take care.